Ladies and gentlemen of the crypto space, we're live on a Wednesday, March 23rd at 11:41 a.m. Monday was cut off. Internet was down. That was no fun. But we're back in action. Obviously, we were powering through the whole thing on Discord. I was sitting outside on my cell phone the best I could. Couldn't do much work, but I did what I could do. Well, that's been going on in the markets, and we're handling it to the best of our abilities. Obviously, there's complete uncertainty. Nobody knows the direction of these markets. And if anyone who says they have a real strong instinct of the directionality of the market, it's complete bullshit. There's no certainty whatsoever, up or down, left or right. I mean, until the Fed makes a decision whether they're going to really fight inflation, because they're not really fighting it. They're saying they're kind of fighting it, and maybe there's capitulation to the downside, and then they're really going to fight deflation. Historically, the vast majority of rhetoric from the Fed has been them expressing more fear of deflation than inflation. Is the inflation fear just political? Obviously, there's real burdens for us average citizens dealing with inflation. That's to say the least. But what's the real motive? What's the real narrative at play? And that's really what drives the uncertainty. There's so much overtone, as we discuss and as the macro economists on social media talk about, for extreme downside, for complete market disruption. Liquidity is draining from the system, and I agree with that. There's all the narrative in the world for bullish upside. Like, why are we holding? Why are sovereigns holding sovereign debt as collateral? And if the U.S. could confiscate Russia's reserves, uh, sovereign reserves, then what's to say other countries aren't fearful of that as well? So maybe there's a rush to the door of holding treasuries, and then they want to hold an outside money asset like gold or cryptocurrencies. But there's no certainty in that narrative. We get to hear the narrative. It's a fascinating narrative. It's a tantalizing narrative because that's the market that we love to engage with. But we fall back on the reality that there is no certainty of complete disruption of the status quo regime. The disruption of the status quo regime only gets to happen once. Let's go over to the main screen. This chart only gets to break out once. Actually, it looks remarkable on the 15 men pushing up against the one. Well, it's a 50 SMA, 100 SMA bearish cross. But we'll see 2.373% on 10-year yields was pushing up on 2.416 last night. If you go out to the daily and the weekly, let's go out to the monthly. The monthly, there's the moving averages that catch my eye. And we got the price ranges up. We're in a zone of yield on the 10-year Treasury bond that historically is a precursor to an outright systemic event. If you go out to the yearly, you'll see it very clearly against the 10 SMA. It's a heck of a moving average. This is 41 years of chart action in a couple of bars. So back in 2020, back in 2018, back in '07, back in 2000, anytime this chart gets above the 10 SMA, it's a precursor to an absolute economic catastrophe and a strong reversal to the downside. Now, the complexity is we have the strongest reversal to the downside in history in 2019. And what happened in September 2019 was the banking lending between banks completely failed. And that's what happened in September, the repo crisis. That was a complete failure of the economy. People think March 2020 was some sort of failure. No, this was set up in September of 2019 and was foreshadowed by the yield on bonds, and generally the 10-year is right down the middle of the yield curve, so it's a good representation of the overall state of the bond market. It's a good bellwether, so to speak. So look at that. Look at that. A rip above the 10 SMA and the yearly, and boom, September. So this is Jeff Snyder talks about the inversion of the Eurodollar curve or the inversion of the bond market. But if you want like a simple way to look at serious shit, I mean, this really paints the full picture. 2019, 2018, the last, screen's refreshing, 1 second. and obviously in '07, and we know what happened. It's right here on the chart. So this is an interesting topic I wanted to talk about. So aside from macro financials, there's a lot going on. My 2021 narrative of seamless cross-chain interoperability is really coming to life in 2022. We were hopeful that the multi-chain and solidly narrative was going to play out, manifesting like seamless cross-chain swaps. Solidly would be using multi-chain, and we really dug deep on that one, and that just, well, boom, face plant. So that didn't work out as planned. Not to say that the narrative for those protocols are entirely interrupted, but their tokenomics suck. And the VE33 implementation certainly did not live up in any regard to my expectation. Dilution protection is not achieved to the extent that of what I would have liked to see. Whatever happens there, happens there. It is what it is. Live and you learn. And now we have a variety of new tokenomics that are coming online in the coming months that I find quite interesting. Probably the most interesting tokenomics coming online is Citadel, which is a manifestation of Badger, and I happen to think it has a dilution protection implementation that's quite satisfying. And I'm going to be participating in Stargate governance, giving some tokenomics advice, and we'll see what comes out because obviously other folks will be participating as well. But I think it having such a key infrastructure component in the broad DeFi space, there can be massive transaction fee revenue flowing through the system over the next 1, 2, 3 years, which is quite tantalizing to think about because with income allows the protocol to spend, and you want the protocol to spend well, and that's basic balance sheet uh, management. So that's really in crypto. That's a tokenomics manifestation, how to optimally manage the balance sheet. So we have so much history and so much experience to draw on, and I'm sure there's going to be some interesting people contributing aside from myself. So if we could get a good tokenomics implemented there, it's a great protocol. Very excited for it. Seamless cross-chain interoperability. I mean, execute one transaction and interact with any number of contracts on however many of chains. That's literally crazy. Obviously, catalog finance and Ren VMs are still on the table. It's just they've been there. Whether they catch a bid or not in price action, that's another story, but that's separate and apart from technology and what they're doing and what they're building. I would say Stargate right now has the first mover advantage. Catalog isn't live, and Ren L0, as they've titled it, isn't live. It's getting close, and that's the type of protocol that I myself have kept in my back pocket since early 2020, and I'll keep in my back pocket. The same with an STG position. Keep it in my back pocket. I don't trust these markets, though. Don't trust them at all, so I'm not overexposing to the markets in any way, shape, or form, even if you have a short time horizon inverse, well, cup and handle, really, and a breakout in the right now. Let's see if it gets above this green line. That's a nice previous support. So this is just has bearish written all over it. Let me elaborate. So obviously, an inverse head and shoulders is a relatively bullish trend formation. It's a very short time horizon trend formation of a couple of days. The breach of the 200 SMA to the upside on the 4 hour. But look at that. Even just the remote expression of resistance at a previous support that has weakness overtones. Look, this was a decent inverse head and shoulders. It broke out and it created our trend formation, which we broke out of. That's good to see. These are good to see. But basically, this is a process of bottom hunting. I can't stand bottom hunting. I can't stand seeing a support. Oh, is this a previous support? Are we going to break through it? And that's just such bottom hunting. In a bull market, you don't question it. You got higher lows, higher highs. It just goes up, up, and up. Zoom out on any of our charts that we like to look at between 2020 and 2021, and you could throw cash at anything, and it was going 5, 10x on the money. You don't have to try and find a bottom. I just don't trust these macro conditions. Bottom could fall out of everything. And then you're going to get some really nice discounts. And I'm watching the Ethereum chart. That's really what I'm focusing on. I'm going to focus on the macro assets, and I'm about 55% stables right about now. So clearly 45% exposed to the market. Great. Strong hands. I got strong hands with regard to 45% of the portfolio. So that's nice. But I have the capital. And what am I going to do with the capital? It's probably going to be a large macro asset position. You got to remember with the Bitcoin capitulation in 2020, it ripped 20x on the money. Bitcoin ripped 20x on the money. You didn't need to think about microcap altcoin assets. You didn't need to go out on the risk curve at all. You didn't need to do anything. It was just Bitcoin and you ripped 20x on the money. Oh my God. While people are like, oh, this one's going up, that one's going up. You get irrational exuberance over here. Oh, it's up 1,000% in 2 days. Better sell it quick because what goes straight up comes straight down. You don't need to deal with any of that bullshit with the macro assets. They follow a different rhyme and reason, and very much is the case that Bitcoin follows a different rhyme and reason as compared to Ethereum. And my general sentiment heading into whenever the next bull market emerges, maybe summer or later this year, could actually persist well into 2023, depending on how Fed policy proceeds forward. But it's probably going to be me focusing on a macro asset, and that macro asset is predominantly Ethereum. Um, so what does that mean? We could have we're having bullishness. I mean, we're breaching previous highs, but this is such short time horizon crap, and it drives me nuts. If you zoom out, where are we? We're above the TWAP on the monthly, which is nice to see. We're below the 10 SMA. Anytime we get above the 10 SMA, we start to see some bullishness. But given the prevailing macro conditions, look at the horizontal nature of the 10 SMA. You're not going to see, what is it? It's called breadth. Like a nice thrust above it. There's just uh, so many bars between our previous all-time high and uh, the 10 SMA that you're not going to get that real thrust to the upside to really set in some bullish overtones. But this chart looks good. And what does this mean to me? This means to me you probably want some exposure. You don't want in complete exposure. So how do I think about this? Well, I'm setting up some rocket pool. Was it mini nodes or micro pools? Mini pools they call them. And I'm going to probably deploy some mini pools and set those up and lean into a position and retain a good portion of cash in case we have capitulation to the downside so I could really gain the exposure I would like to see with Ethereum. Because we know where it's heading. It's in a couple months. It's going to be a deflationary protocol. That's insane for the scale and size of the asset and its functionality as a currency in the DeFi space. It's pretty extraordinary for it to have a deflationary circulating supply. So that certainly piques my interest. You know what we talk about in here. It's monetary policy, monetary policy, monetary policy. Let's see who's in the stream. 45 people, 13 likes. We can do better. Ruben's in the house, a pleasure. Dan, good morning. Any thoughts on potential UST plus Frax partnership? That'd be nice to see. Federation is everything. The more coordination organization, the better synergy they have, and that'd be great to see. Killis, good morning. Stargate is mooning. Stargate did very well. Stargate, there's a lot of folks that bought in early. I myself had a 71-cent position. It's not, how far could it go? I don't know. Got to remember it is an inflating circulating supply. Pool positions are incentivized by Treasury, which is constantly increasing circulating supply. So there is going to be a fair amount of depreciative pressure at some point. So how far could it go? I don't know. It'd be nice to see it go up a bit more. $2, $3, $4, $5 would be uh, a lot to ask for in such a short period of time, a couple of days. Probably be a fair amount of profit taking, which is what we're starting to see. $2 and change cents down to 186, or even this rip up here from a buck 90 down to $1.47. So there's a lot of volatility, especially in the early stages of an asset hitting the market, especially given it's inflating as of right now. The inflation rate is going to decrease. It's disinflationary, I believe, in the next couple of days, and I'll get more insight as governance goes online for Stargate. We'll be able to ask these types of questions on Discord. But monetary policy is the big next step on how to all the stuff we talk about, how to get STG out of circulating supply, how to pay pool positions to provide liquidity, what to do with protocol transaction fee revenue, how to distribute it, what to use it for. Biggest thing is how to disrupt circulating supply, hopefully to the downside, creating a deflationary pressure, while still allowing the protocol to have be able to spend capex to incentivize providing of liquidity. And this is really where historically curve and convex narratives come into play, because that is the best way to incentivize protocol participation is not paying for it. You have someone else pay for it, and that's why Curve and Convex have done what they've done. That's why Tokamak does what it does, and that's why Liquid Driver does what it does. That's why Pizza has been performing well also. I was going to show you. Nope, I looked at the curve chart already. So, always tempting to take a position, but I already have exposure. I don't need any more exposure. 45% of the portfolio is currently exposed to the markets. That's okay. I don't need additional exposure. You don't need to own everything you want to own. I'm already exposed to this from an old school VCRV position. I'm already exposed to this by a convex position, and I'm exposed to this by a VEFXS position. So don't overexpose to any particular narrative is a topic we've talked about historically, and I'm a good part of the portfolio is exposed to the curve narrative. So I'm exposed to this chart in one way, shape, or form. Dennis, I have a real strong instinct on the directionality of the markets. Strong instinct, sure, but the markets will do everything and anything other than what our instincts say they will do. MF Income, sell STG now for gap gains or stake later for income. Always a subjective choice. Watch it's your risk tolerance. Um, that's it. There's no one can answer that but yourself. Soon, good morning, everyone. A pleasure. STG turned from a 1% play into a 2% play. Very nice. Yeah, it's up over 100%. It's good to see. Lewis, does Ace Ventura have his Series 65? I think he's got something. What's your opinion on the yield curve? Do you think it will invert? Do you think the Fed will continue to raise rates? The yield curve is already inverted, and 10 years, in my opinion, are above the 10 SMA on the yearly. So all of that points to everything that we know happens when the yield curve inverts and when the 10 years are above the 10 SMA in the yearly, we have some sort of systemic event in like a year. So what happens between now and a year? Likely a weak ass market, as the Fed is going to continue raising rates, and maybe they're going to taper their balance sheet off, roll off the balance sheet. So it's going to put downward pressure on the markets. We'll see how high it goes. We're not getting past all-time highs. There's not going to be all of a sudden some magical miracle reversal in a market that's completely owned by federal monetary policy. There's nothing left to this markets. The rate cycle is dead. Bond cycle is dead. It's all been interrupted. Everything has been completely changed. And really all it is federal intervention cycles. There's nothing left. I mean, look at this cycle. This was stable-ish between at least like '07 and the 80s. Between 1980 and 2007, there was some nice stability to the trend. But look at this shit in '08. Look at this massive volatility increase, massive range increase between what is it, 80 to '07. It's 27 years of this 41-year chart. It was relatively stable. It was benign or muted, you could say, relative to this insanity over the last 12 years since '08, 14 years at this point. I mean, 2020 was just naughty. That's a ridiculous wick. So there's nothing left to this cycle. It's done. All you have is federal monetary policy intervention cycles and fiscal as well. Um, Risky Crypto, good morning, Cap. My man. FM, you think Pulse Chain will perform well? Well, they need bridges. If they don't have bridges, it doesn't do anything, and you're not going to get capital onto the system. And, if you can have just a DEX, it's not going to do much. They're going to need a shitload of developers, which they're going to have to pay. I have no idea. Suffice it to say, I wouldn't be interested in a position that far out on the risk curve. Does it have a huge amount of interest? Sure. Did they acquire a huge amount of capital? Sure. Can they spend a fair amount of capex? Sure. What are you going to spend the capex on? Are you just going to pay people to use the systems? I think the capex would probably be better spent on developers, but are there the developers? I don't know, because the developers of that skill required to build front ends and start to maintain the contracts, all the forked contracts, those developers are already building their own shit. And they're not going to be building on a new chain that's just, a fork of Ethereum. I don't think there's much incentive to do that. Ethereum has just too much momentum. And the merge is going to be a big deal in a couple months because that changes everything. With the deflationary monetary policy, I expect the price of Ethereum to significantly increase, which means more expensive gas costs. But what's going to happen is the Ethereum merge makes L2 transaction fees basically free. It's basically going to be free to operate on an Arbitrum and an Optimism and ZK. It's free. It's pennies. It's cheaper than the L1s. It's cheaper than the alt L1s. After the merge, it's going to be a fraction of the price to operate on the L2s as compared to the alt L1s. And that's exactly what the Ethereum has done. And that's why there is no Ethereum 2.0. It's really an Ethereum 1.5, where they merge the beacon chain, they get proof of stake online, and then they focus on the L2 solutions because the L2 solutions already have a huge amount of capital on them. What's the point on trying to convince that capital or incentivize that capital to migrate back to Ethereum L1? And that makes perfect sense. I think the decision was done well. And with the alt between the alt L1s and the L2s being going to be significantly cheaper than the alt L1s, it's going to be a heck of an ecosystem to interact with. Um, and that's all coming very soon. So that's why I'm playing with these Rocket Pool mini nodes. I'm going to start accumulating my Ethereum position in positions that are not liquidatable. So I'm going to watch my sizing very carefully. I'd love to get a large position in Ethereum, but I can't stomach the market. I stare at this chart. I'm like, I just can't do it. I have, and I've been flip flopping. I tell you guys on Discord, I'm paper handsing the shit out of my cash position. Look at that below the 10 SMA. I just don't trust it. So that's the way I'm going to be playing the market in the coming days and weeks. Um, who cares what the hell? Stargate. Stargate is a cross-chain interoperability protocol that offers one single transaction finality with contract interactions across multiple chains. It's pretty extraordinary. Dominic, out of work today. Glad to catch you live. Hope all is well. Everything's good. I was back on the internet. That was very frustrating on Monday. It was 9 hours with no internet, and 9 hours in the crypto space, and serious shit can go down. Stargate is on every single chain there is. All right, Stargate's on the main chains. We'll leave it at that. Liv W's in the house, a pleasure. STG is on 8 chains. That's right. Dennis. Oh, I don't have the chart up. Damn it. Well, I wasn't really talking much about the chart. Um, can't see the chart. Yeah, yep. There's not enough conviction in the markets right now, either from the bulls or the bears. Yeah, it's complete indecisiveness. It's everything we've been talking about. It just is what it is. You can do accumulation, and that's exactly what I plan to do. But I'm not going to do that with the vast majority of my cash position. Um, yeah, I'd be tempted to with the merge narrative coming up, but I just macro is just screaming right now. I mean, macro is just screaming that this thing's going to have a strong reversal. Now it could take months. It could take 3 rate hikes, 3.5% rate hikes, and towards the end of the year we have some sort of liquidity event. It just happens every single damn time. There's 41 years of history here. That's it. Uh, Cown, Cown, my man. Has anyone told you sound like John McAfee? He's a good dude. I like that guy. Woo. I uh, like Birdie and was it Wall Street Money Talks. Woo. A little far out, but we always loved him. He's a staple of the industry. Uh, Bitter's in the house. How are you? Hope everything's well. Are you farming stables on Stargate or just bought it as it is? I took a position. I bought the bond at 71 cents. I have some round two, stage one due to me, which is a relatively small position. But I have stables on Stargate. I'm it's getting diluted really quick, but it's still cranking out like 19%, so there's no reason not to let it sit for a bit. So that's it. I'm kind of just trying to do less transactions on the market and take a step back and figure out not how to play this market because this market sucks. I'm trying to figure out not when bottom is because that's just a waste of time. I'm trying to position myself well, as the title of the stream says. 2022, what about 2023? So that's why I'm thinking about the merge. That's why I'm thinking about cross-chain interoperability. That's why I'm thinking about stuff like Citadel. I'm definitely going to take a position in that. I'm thinking about Ethereum and the size of the position. I'm thinking about rocket pool nodes. I'm thinking about Stargate and Catalog Finance and Layer Zero, which is what makes Stargate work, and Ren L0, which is their version of Layer Zero. So these are very interesting things, and it's not that I favor any protocol over another. What I favor is the ecosystem it creates. And the biggest narrative I had in 2021 was seamless cross-chain interoperability. I never expected it to come this quick. I really never expected it to come this quick, but it just came firing out of the gate on all cylinders. Pretty extraordinary. Leonardo, hi Cap, your stablecoin position, do you maintain the F network or other networks? I keep it all on Ethereum denominated in GUSD with no transaction approvals. GUSD, no matter the price in DeFi, GUSD is 1-to-1 with dollars. You could have a horrible liquidity imbalance in DeFi, but you could transfer your GUSD to Gemini and get $1 for one GUSD. So you could be like 75 cents, could completely crash and go off peg in DeFi. It's irrelevant with regard to its value as a dollar. So that's pretty cool. Jashansky, Noah, any take on Lido as a supplemental play in the ETH merge? So I'm opting for Rocket Pool. So I set up a node and I'm syncing it 71%. Once it's synced, I create a wallet, I could do my deposits, and I could start creating mini pools, which I think cranks out like 6% on Ethereum right about now, which is pretty cool. Um, Johannes, Freedom Hacking, thank you for your stream. No, it's a pleasure. It's a pleasure. Oh, I lost connection. Let me restart. Of course, it asked for a password. 2 seconds, guys. We'll wrap up the stream in a couple minutes also. Yeah, risky crypto, how do you get bonds with STG? You don't right about now. There's nothing to do with STG, but STG is something that I look forward to participating in governance, talking about their monetary policy and how they could really, do what they need to do with the protocol. Because monetary policy is basically, balance sheet management, capex management, and you need a solid monetary policy to. That's the business. That's a business in many regards in the crypto space. What else benefits most from the merge? L2s like Matic. Yeah, well, no, not Matic like POS. Not their POS network. It was really Arbitrum and ZK rollups and really the Ethereum narrative because all the stuff on Ethereum mainnet still work and that's big. Like I know a lot of folks with relatively small portfolios, and the most important thing you could do as a smaller market actor, which is metaphorically like a fish or a tuna swimming in a sea of sharks and whales, is to know how to navigate that sea and at least understand the mentality of the whale and the shark. And the better you understand the mentality, the better you understand this market, and the better you can navigate it. So you got to remember there was such a big uh, trend of persons angry with Ethereum mainnet. Oh, it sucks. It's dead. It's not going anywhere. You got to remember that's a mentality of small capital positions, and that's okay. And it's not. I'm not marginalizing a person's portfolio, but you got to remember there's how many people with hundreds and hundreds and hundreds of millions of dollars, and the most secure network is Ethereum. So they're not operating on the L2 chains. Now, clearly, there's a lot of money on the L2 chains. There's billions of dollars, but there's not 400 billion dollars. That's why Ethereum is what it is. That's where the big money has been playing. And that's not even big money relative to where the market may go. Ethereum goes 10x on the money, and you got a $3+ trillion market. They're not going to be operating on the smaller networks until they could be time tested, mother approved. And that's going to take some time. So that's where the big money plays. That's where the whales and the sharks. That's where they play. Now the whales and the sharks, they wander off and they go on to the seas and the lakes and the freshwater lakes of L2s, and they nibble and gobble. So that's a solid metaphor of an ocean full of whales and sharks and fish and bigger ones like bluefin tunas, and you got your freshwater salmon versus 2,000 pounds on the bluefin tuna. And if you need to be able to navigate that kind of market, so think about it in those terms, will give you a bit of an edge. Um, do you trust beefy finance for their auto compounding? Probably. I just don't have any interest in it. I don't think those types of yields are meaningful. If you're getting 1,000% on your money, uh, this, that means you're out on the risk curve with some bullshit assets. They're going to be extremely volatile. You're not getting good returns on relatively uh, strong assets, especially stablecoins. You're gonna get pennies on the dollar, and you might as well just wait and get a 20x on Bitcoin or Ethereum if on a market capitulation. So if you're going out on the risk curve one on an alt L1, and you're going into a contract protocol, which has been de-risked in many regards, but those like Beefy's not just Beefy; it's using protocols that have contracts that are even further out on the risk curve that are relatively new. So while there's a great chance that nothing happens with new protocols because the contract standardization has occurred to such a degree with Open Zeppelin that we're having less and less security incidents, but that doesn't mean you're not going out on the risk curve. Not going out of the risk curve is Ethereum mainnet, Bitcoin, Ethereum, Aave, Curve, Bancor, Convex, and all the shit that has 15, $20 billion worth of capital on it because money incentivizes the hackers. So if there's big TVL on a protocol, that's basically paying for to prove that it's a secure protocol. $20 billion on a protocol, and there's no exploits. They probably have things under control. So that's a good bellwether for where to park the vast majority of capital. So right now I sit spot and I wait. I could throw it on Aave and get a 0.5% or 1-2% on GUSD. No, I'm going to sit in the damn GUSD and wait for the damn market to capitulate and probably scoop the crap out of Ethereum. I'm probably going to do that even sooner. It's not going to be the majority of my cash position, but I look forward to this node syncing and creating these um, rocket node mini pools, rocket pool mini nodes, rocket pool mini pools. Let's wrap up the stream. Lewis, have you ever considered being a macro legacy and crypto analyst for a major firm? Clearly, you have the jam and the jelly and the peanut butter like no other, loose, smooth, and in the groove. Yes, I would probably entertain conversation and probably entertain an offer, but I have also a responsibility, and I like where I'm at right now. I like the people I work with, and I like the project and the software they're building, and I think I could help and contribute to what they're doing. But don't get me wrong, if some firm wants me to have macro conversation with their traders and do what I do with charting portfolio management, um, I would be irrational to not consider it. I mean, bottom line is this: there was this tweet. I'll end on this. There was this tweet yesterday that I retweeted where some dude handed his boss his portfolio and it went from 10 mil to 50 mil, and now the boss is sitting on 4 mil. That's ridiculous. One, how the hell do you turn 10 mil into only 50 mil between 2020 and 2021? There's no reason 10 mil shouldn't have been like 100 mil, 100 mil plus. And how the hell do you turn 50 mil into 4 mil? That's insane. That's absolutely insane. I mean, between 2020, March 2020, I'm sitting on 4,000% gains. At one point, it was 10,000 from the all-time high. It was 10,000% gains. So I'm down 60%, give or take, but I'm up 4,000%. So that's why I always say measure from the bottom. And that is really what, like you're saying, Lewis, is I could have been. What did I learn from this? I could have been more protective of the large gains from the bottom. I probably should have retained like 50, 60% from the to, from the 10,000% all-time high. It'd been nice to see at about 5, 6,000% gains since March 2020. I mean, look, is that greedy? I'm saying uh, only for 4,000% gains since March 2020. I should have done 5, 6. You got hedge funds out there running around 15, 20%, and I'm out here being the risk adverse guy in the crypto space, and I managed 4,000% gains. Man, there's some folks out there that absolutely cleaned up. There's folks out there that I'm aware of that I know. They got that 10, 15, 20,000% gains. It's absolutely crazy what they're holding on to, and they're smart. I'm very, very impressed with a lot of the folks that I remember from earlier crypto seasons, 2017, 2016, and how well they've done. It's very, it's inspiring to see other persons. It's not do well. It's be smart. It's just we could do better. And don't for a second think that I don't get a little excited when I see folks that are in my our Discord and on YouTube do well. That gives me it's like a parent looking at a child. You did well, and it makes me happy. It's kind of why I do what I do. Last couple of questions. I'm going to wrap this up. How are your NFTs doing these days? Unknown. I have a very nice NFT portfolio. I don't really look at the price of them though. What do you think is the percent chance of capitulation in less than 30 days? Probably very high. I think this shit's going to flip the bird tomorrow. I don't trust it at all. Why would I be in a market that I don't trust, even if I think there's upside? I wouldn't be in this market unless I'm thinking it's going to breach all-time high. And the only way this market breaches all-time high is it crashes and we have federal intervention. So there's no reason to have any more of my cash position exposed than I need. So how much of the cash position do I need exposed? I want to start deploying some of these mini pools. So that I could warrant. That I could warrant. Um, yeah, I'm a rocket pooler, one curious view. But I'm doing server. I got an EC2 instance, 2 terabytes of storage, and 8 gigs of RAM. And I'm working in the terminal and I'm setting up this stuff, which is pretty cool. Only 10% of disk space used. So I got plenty left. 11%, 74% synced. Once I get the uh, Ethereum, uh, Ethereum one, which is a Geth node. Once that's synced, I'll be able to create the wallet and start finishing up the mini pools, which is pretty cool. Sam, you're very welcome. Jashansky, that's really hard to say. 20%? So, I would say a lot more than 20%, in my opinion. They must have been in shitcoins. I don't know what they were in, bro, but all I know is from 50 mil to 4 mil, that someone did something wrong. Hedge funds have nothing on you. 4,000% life changing. And it might even be, yeah, I'm very satisfied. I wish it was more, but we always wish it was more. But we got to remember that this market is taking money from a lot of people that didn't know any better. I really feel bad for people playing on Robinhood with options that probably have a couple $100,000 worth of on the books 1099 reported tax obligations, and they probably don't have that money to pay this year. So that's who I really feel bad for. Like the crypto space is off the books, so the odds are like it's a little different than 1099 reported Robinhood tax obligations. Um, Liv W. Market gonna make some big move like early to mid-April. Not sure what it will look like, but that's what I think. Well, bottom line is we'll be there. That's what it is. We're gonna be right there, front and center. We're gonna have exposure to the market. We're gonna have cash so that we could adjust, get into some additional positions, and we're gonna be smart about this and not do it the way we've done it in years past. That's why we started the stream, and that's what we're gonna do. You set up an AWS node, not I just spun up a node AWS, not the way, in my opinion. AWS and an EC2 node is not the way, or just you would think just an Ethereum 2 node and call it a day. That's actually an interesting consideration. Albeit Rocket Pool is quite robust at this point. They spent a long time getting their software um, up and running. So fine, I'll hesitate for a couple of minutes, thinking of just a raw, beacon chain and a deposit and call it a day. But I think Rocket Pool is definitely tempting because it's not a deposit. I'm not depositing on rocketpool.com. I'm not holding RF. I'd be literally setting up mini pools. So other people could deposit to it. It's an interesting. It reminds me of like what everyone hoped for with Ren and dark nodes could have a pooled dark node, and Rocket Pool took a long time to get this implementation working. Oh, it's expensive. I think it's going to be like $200 a month. Yeah, but if I'm going to throw like a $500,000 worth of Ethereum into it, making 6 and 7%, all right, $200 a month, not a big deal. But that's you make a good point. But scale and scope considered, it's something that I can entertain. Anyway, Wednesday, March 23rd at 12:23 p.m. As always, thank you all for joining me. After party on Discord, you know the deal. If anyone needs any help, noahseidman.com. I'm more than happy to provide you a little one-on-one advice, opinions, support, anything you need. I will see you guys on Friday. You guys have a good one now. Peace.